Somebody who wants to look purely at a daily time frame, rather like this Kiwi chart that we're just looking at, New Zealand dollar against US dollar, and we'll take their signals purely off the daily. Now, as you will see, I haven't got any moving averages on here at the moment. I haven't got too many indicators at all, just got a Fibonacci, my fib finder grid, and by just purely looking at price action, which is predominantly the way that I trade, then one can actually take trades sort of based purely on this chart and do so in isolation to any other. Now, for end of day traders, then this is absolutely fine. We can just sort of have a relatively quiet life, wait for the trades to come along, and put those trades on. If we look at this right now, what we can see is that just a touch of analysis will show us that we've had price which has moved on down. It's moved on down in a series of waves. So we've got a wave 1, we've got a wave 2 just snapping back. And this will just sort of help us come right to where we are just now. And what we can see is that we've got this series of waves that I'm just marking up, and we've got 5 of them. Now, Elliott wave watchers will be aware of a 5-wave pattern, and a 5-wave pattern is very often followed by an ABC type move, and we may well have had part of that already. And an ABC move will typically go all the way up to the start of wave 5, which is in this 81 region, and that's exactly where price has gone. But then price has actually come on back down, and it came back down fairly rapidly. And the New Zealand dollar suffered from a little bit of news that came out last week. The New Zealand economy is, and has been for years, largely an agricultural economy, and they export a tremendous amount of lamb and mutton, and they also export a tremendous amount of milk in the form of milk powder. And rather regrettably, some of that milk powder that they export have been found to contain a botulism, a strain of botulism, and that has absolutely knocked the New Zealand dollar for 6. As we can see, it's moved on down quite rapidly. But as is so often the case, that bad news may well have set up a buying opportunity. And the buying opportunity has been flagged up by this level. It's flagged up by pricing coming down to a relatively extreme level where there could well be an opportunity to get stuck in. And end-of-day traders would be looking at this, and they would be needing to take their signals based on price actually bouncing up from here. Now, the only problem that I have with just looking at one time frame is that it's fairly single-dimensional, and I like to take a rather broader view, because so often it's possible to get our trades on, and it's possible to get our trades on intraday. So for those people who've got the luxury of being able to glance at the markets during the day, then multiple time frame is without a doubt the way to go. But if we're just purely trading off daily charts, then absolutely fine. Just stay with the one time frame. And we might also want to be looking at the weeklies as well. So if we just look at the other time frames, we can work this down to, first of all, the 4-hour chart. And that's given us a little bit more detail. In fact, this decline on down, not going to mark them up, but again, we've got a series of waves working its way on down, so that we've got this set of 5 waves coming down to this low level. That's that back level that we've got. It's also in the region of a previous low. So we've, without a doubt, had a move which has been a relatively extreme move, and then price has bounced up. Now, yesterday, if I put just a little bit more space between these candles, we can see one of, well, 2 key candles. So that was the gap down. Then we've got a candle which has got a long lower tail, small body. It's a hammer candle. Price then just bounced on up. We've then got a little bit of a correction back. And during the day yesterday, we got a very, very clear buy signal. And that buy signal came through because this candle, this green candle, which completely engulfs the preceding one, is a very powerful candle. And as it engulfed, that was the signal to put a buy in at 78,000. And as we can see, that one has paid off with price sort of moving up really quite nicely through, well, as we can see, around about the 70 odd pips mark. So there we are. We've got a signal that came in, and we could take that just off that 240 minute chart and just watch as that was about to engulf. And there are all sorts of alerts that can be set up for this type of candle so that you don't necessarily have to be watching the screen all the time, but just maybe listening out an alert. And within TradeStation, there are all sorts of different ways of setting those alerts up. Right, so that's just looking at then the daily chart and the 4-hour chart. If we now come down right the way down to the 15-minute chart, we can actually see a lot more detail of what was going on yesterday. Okay, we can see the big gap down overnight. And then we got a big rally that ran on up. And there's something of a disadvantage for us guys in the UK trading Australasian currencies, New Zealand dollar, US dollar, etc. And I quite often do that, Boyke. In fact, I find the hourly is not quite so important. Not quite so important. I've got all the detail that I need on those 4-hour charts and then coming down on the 15-minute chart. I will talk just a little bit about the half-hourly chart in a moment. But what we've got is an awful lot more detail. So there we are. These moves on these Australian Asian currencies so often kick off around about the 2:30 UK time, which of course is where those guys are getting stuck in, and at just about the time that we're really starting to take notice of what's going on in our market, which is around about the sort of breakfast period, 6 o'clock to 8 o'clock. Most of the Australasian traders are then thinking about just packing up for the day and want to head off to the beach, etc. But if we just look at what went on here, we then get the opportunity to get in very, very early indeed. Now, I've said that the signal really came through at about 78, but look at this. There was a signal much, much earlier on. And if we look at the wave formation coming down on here, we've got a very, very clear set of waves, got a 5-wave pattern that came right the way down to this back level, very important level at an extreme, and price then just took off from there. So we've actually got, by looking at intraday charts, we've got an entry, a much, much earlier entry, which gave us a level. I can just pop it across there. And that's given us an entry level of 77.63.64. So it was the test. Price then bounced on up, and away we go. The stop is also pretty important because we can put a stop in just underneath this low. And that stop is going to be, put a line across so we can see where we're going to want to put it, 77.43. So what we're looking at is a stop level of only about 20 pips. Whereas if we were just trading this off the daily and we were going to be taking the long at a level which was going to be above 78, we're going to have a massively wide stop in relation to what we can actually achieve intraday.